And Fed Chairman Jay Powell signaling the central bank is ready to help the economy if needed. That sparked a big rally on Wall Street. Steve Liesman joins us from the Chicago Fed conference where Chairman Powell spoke yesterday. And Steve, were you surprised by Jay Powell's comments? Did it sound to you like something that was pretty monumental?
No, I mean, it was important what he said, but I kind of expected it. And it's important to listen to what he said. I mean, not just Powell, but also Richard Clara in a CNBC interview, signaling that the Fed is ready to ride to the rescue of the economy in the event the tariff war causes a downturn. Now, Powell did not say rate cuts, but let's listen to what he did say.
We do not know how or when these issues will be resolved. We are closely monitoring the implications of these developments for the U.S. economic outlook, and, as always, we will act as appropriate to sustain the expansion with a strong labor market and inflation near our symmetric 2% objective.
Right. So the market heard act as appropriate as rate cuts. Later in a CNBC interview, Fed Vice Chair Richard Clara said the Fed would take more tariffs into account as it set policy. He said he wasn't so concerned about inflation on the front end and more about how tariffs could weaken the economy.
I think we would confront that when we get to it, but I think the way that I think about it, Steve, as one member of the committee, is I think textbook macro would indicate that you would tend to look through the price level effect of higher tariffs because it's not really telling you anything about long-run inflation. And I think that would be my first instinct, which would be to look through that on the price level.
Okay, and now...
And then obviously slower growth means that you want to do what you can to maintain growth at its potential.
Do what you can. So let's see what the market probabilities are here. June, the market was actually flirting with June for a little bit, but that's back down to 18%. We'll talk about June in a second. July, 63% for a rate cut. September, 93. October, 96. And 2 rate cuts at least are built into the structure of the Fed funds market. So here are the dates to concentrate on. The Fed meets June 18th and 19th. Before that, new tariffs on Mexico, June 10th, could be put in place. After that, President Xi and President Trump meet in Japan. So the Fed essentially is between the rock of new tariffs on Mexico and the hard place of our trade dispute with China. Becky?
Can I just say, Steve, I'm looking forward. I just had some of my followers said that they were surprised that Clara said he didn't see any effect yet of the tariff, very little on either on inflation or did he say he didn't think we publicized that enough yesterday, and that it was noteworthy that he said he hadn't seen that.
Okay.
Did he say
tell
that?
Your viewers I ran that. Tell your viewers I ran that.
See, I didn't see it either.
Times.
But nobody sees everything on.
I wish don't know what you do in the afternoon. There,
you know
Joe,
that our ratings
in your bathrobe in the afternoon. I'm not.
I don't want to know about your fantasies, but if we
it's yours, Joe.
Okay, if we could, if all viewers could just stay all day long, our ratings would go up like 1,000-fold.
I said that 3 times that I said that 3 times that he saw a small effect so far.
I think
it is interesting.
Yeah,
he does
4
see these
times
Mexican
now,
tariffs.
or 5.
No,
Right.
Okay.
Right. It is interesting. He sees these Mexican tariffs and other Fed officials who I've spoken to as another order of magnitude. They are as big as. And by the way, it's also worth pointing out, Joe, that second round of tariffs on Chinese goods hasn't really hit the economy yet, to the extent that it will. But I think what they're saying is, so far, what is essentially seen as a $70 billion tax or tariff on the U.S. economy has not really shown up very much in the macro data. You can see it in the import prices in that they have fallen by 1%. And so prices have the tariffs are 5 to 7% on the initial round. So that means that U.S. consumers and businesses are absorbing them.
Hey, Steve, good work yesterday. Lots of great stuff.
Nice of you to say. Thanks very much.
No, really, I appreciate it.
We have more stuff today, by the way.
Stuff we had here on our show and then all through the day. Really great.
Save the market, I think.
So I was glad to sit down with Clara. I'll tell you this because you guys have asked me how is the Fed going to think about this, and I have not really had an opportunity to, at least on camera, ask the Fed officials. And Clara told me what I thought they would think about it, which is to look past the inflationary impact because it's a one-time rise in the price level and address growth. And I'll tell you what the big question is, and that's why I focused on June. Does the Fed do so preemptively, or does it wait to see the effects of the tariffs on the economy and address that? And then layer on top of that people like Charlie Evans, who I spoke with, they may want to be cutting anyway. So this may be a sort of proximate cause or excuse that they have out there.
I mean, that's like a win-win for like traders that mainline cheap money. If they don't worry about the inflationary aspects of tariffs and they only worry about the growth aspects, that just means easier money. Maybe that's where it's why we're at 98% or whatever it is for the Fed funds.
I'm slightly more nervous, Joe, that tariffs have a broader impact on prices. There's no evidence of this, obviously, because we haven't done something like this in a long time. But let's say that these are used as excuses to raise prices more broadly.
But Charlie was saying we need that. Charlie, in your interview, he was saying we need the air.
Charlie might say we need that. That is correct. And what
I was
Charlie
listening
would
to
also
your interview.
say is, thank you. That's wonderful.
Yeah.
But Charlie, you were here, right? So Charlie would also say that he doesn't give a whit about that if it doesn't change people's inflationary expectations. So that's the thing they're focused on, which is, you can raise prices all you want. If people don't come to expect price rises, they don't act in an inflationary way, and you don't have a problem. There's a lot of talk here, by the way, about, why the Fed is missing its inflation target and what it needs to do about it. And this is a process the Fed is going through over the course of the next year, which is a sort of deep think about how it makes policy, how it hits its target, and what it does next time we hit the zero lower bound, which is they have to lower rates to zero in the recession.